Good morning, dear viewers. Today is Wednesday, October 29, 2014. Here I give a wrap-up of the commodities complex as it takes shapes during the course of the day. First, let me talk about the macroeconomic factors that are overwhelming the markets. The US markets closed on a high last night after the impending FOMC Fed meet outcome is expected later tonight. Markets are positive and upbeat after the earnings data is also from the US, as also from the consumer confidence index which came out yesterday. So the US dollar index was mildly lower yesterday with pushed up commodities, especially base metals and crude yesterday. The Nifty is now trading at around the 8070 to 8080 mark. Support is now seen at 8000 and resistance at 8150. Immediate resistance is seen at 8100. A break above could take it levels up to 8130 to 8150. INR for the last 2 weeks has been consolidating in a range of around the 61.2 to 61.3 mark. Support is now at 61.5 and resistance at 60.8. So the range can be taken at 60.8 to 61.5 as of now. The major data that is expected today is the conclusion of the FOMC Fed meet, which is expected later tonight, and the outcome is expected after market hours later tonight. Market pundits are already discussing the outcome of the event. Markets expect the quantitative easing or the stimulus package to be completely removed. Of course, the markets are now focusing more on the interest rate commentaries that are likely to come out at the conclusion of the meeting by the Fed chairman, Janet Yellen. Interest rates are expected to start moving up in the US only from the second half of 2014. But what would be interesting to note would be the commentary or the hawkish or the dovish comments that are likely to come out, which will give an indication of the trend in which the interest rates are moving towards the US monetary policy. This is likely to directly impact the US dollar in overnight trades, and the INR in due course tomorrow would react either on the upside or downside, having a huge impact on the overall commodities complex. Now let me talk about the individual commodities as I see it today. Meanwhile, I'd like to also highlight another point that in the month of November, the Swiss government is putting out a referendum on the gold reserves that are to be maintained by the government. If the referendum comes through, this is likely to have a positive impact in the gold prices during the month of November, and hence this important event cannot be discounted, and the market players should take note of the outcome during the course of November, which we will be updating as soon as we come to know as to when the dates are likely to be. Now we come to the individual commodities. Gold is now trading at the rate of around $1220 to $1230 per ounce. This rate has been holding on for the past 1 week, and so long as it trades below 1235, it is expected to move in the range of a support of 1220 and resistance 1235. About 1235 rate levels could be seen as resistance at 1242 and 1250, and below 1220 support can be seen at 1210. So long as it trades within the range of 1220 to 1235, we don't expect much moves during intraday trades today. Of course, once the Fed outcome is announced, the markets are likely to move out of the band of 1220 to 1235 and more clear direction could be obtained. On the MCX front, gold is now trading at around that 27,180 to 27,200. Strong resistance is seen at 27,280 to 300 and support at 27,040. We expect sell-on rises for an intraday basis till the outcome of the Fed meet, so long as it remains below 27,300 to test up to levels of 27,100 and 27,000. Silver is trading in dollar terms in the range of $17 to 17.3 in the last 1 week, $17 to 17.35. Resistance would be seen at 17.5 and support at 16.8. So long as it does not break out of this band, you can't expect major movements to take place in silver. On the MCX front, it is now trading at around the 38,200. For the past few trading sessions, it's taking strong support at the 37,900 to 38,000 levels and resistance at 38,500. So as of now, we can say that the trading range can be 38,000 to 38,500. A breakout either side could see the next move. Now, any movement in the INR tomorrow as a rally on account of the monetary policy decisions taken by the Fed will have a major impact on bullion. So traders are advised not to carry over positions in bullions and trade strictly intraday. Now we come to the base metals. Base metals have been rallying from support zones over the past 1 week, which it took a few days back. Copper is now trading at around the 418 to 419 mark. But a major stumbling block or a resistance will be on a positional basis at around the 422 levels. A break above 422 could see 424 and 426. On the downside, strong supports are seen at 416 to 415. Next downside would be on a break below 415. Important to note would be the data that are emanating from China, as also the stockpiles of each base metal coming out of China. Chinese are likely to go in for building up of inventories or stocking up of inventories in due course, and this is likely to have a positive effect on all the base metals. Next we would be talking about nickel. Nickel is now trading at around 958. Over the past couple of days we have seen that from a low of around the 899 to 900, it has jumped to a high of 962 today. So long as it stays above 950, it is positive for the time being. Immediate resistance is at 970. Further upside can be seen on a break or close above 970. On the other hand, a downside below 950 could see further selling pressure up to the 940 to 932 zones. Here again, after sharp sell-offs during the past few trading sessions up to the 900 levels, a short covering rally was seen up to the 925 and 930 levels, and above that there is a positive momentum in bullion in nickel, especially as far as China's stocking requirements are concerned for nickel. Zinc, lead and aluminium are trading highly range bound in a narrow range. Lead is facing strong resistance at around the 124.50 mark and support at 123.50. Expect to trade positive only on a break and sustains above 124.50. Zinc is trading range bound in the range of 137.50 to 138.50. A breakout either side could see the next move. Aluminium holds positive and more buying could be seen above the 122.5 mark to test 123.5 to 124 with support seen at 121.5. Crude, we have seen over the past 2 weeks of trading that it's come down from highs of around the 5,200-300 mark to lows of close to around the 4880 to 4900. Now consolidating above the 5000 mark at around the 5030. Immediate support is now seen at 4970 to 4980 and resistance at 5060. Expect positive momentum so long as it sustains above 5000 to test 5060, 5080. In dollar terms, it has taken strong supports at around the $80 on a closing basis, now trading at around the 81.50. So long as it sustains above the $81 mark, positive moves can be expected in crude oil. Inventory is expected later tonight, and markets are expecting a sharp drop in inventory to a 2-year low, and this is expected to hold up the prices. Natural gas, after seeing sharp sell-offs during the course of the whole of last week, is now consolidating. November natural gas is now trading at around the 229 mark. Resistance is seen at 232. A break above 232 could see further upside. On the other hand, downside support is seen at 225. Overall, we would prefer traders to have an intraday attitude towards trades today, especially since the outcome of the FOMC meet could have a huge impact tomorrow morning when the market opens on the MCX. For further details and updates, please visit our website at www.akshayaship.com and visit all our websites. Thanks and have a safe and profitable trading day.